So this much should be said when it comes to gold. All its main technical indicators are flashing green, but really the breach of that psychological $1,800 level doing the trick in terms of enticing speculators into the market, and in turn could make the precious metals price even more volatile. Now, before we get into where traders stand, let's take a look at some of the factors. And of course, the main one that everyone's talking about has to do with quantitative easing and record low interest rate. The non-yielding finite metal obviously becoming more attractive under those circumstances. And when it comes to increased uncertainty, you've got two fronts. On the economic front, obviously is going to entice a lot of investors into hedging with it, as well as on the geopolitical front, where some central banks might be forced into using it as an alternative. Interestingly enough, it's not the traditional big markets, China and India, that are driving recent gains. It's actually record inflows on the ETF front, and primarily from North American funds. In fact, if you look at it from a global economic environment, if the situation worsens, households are actually going to be forced into offloading some of that gold. And here, when we talk about some of the downside risks, we can look at liquidity, and in this case, the likes of which we saw when we had that sell everything moment during the start of the pandemic that forced investors into unwinding, as well as a potential speculative move to trigger stops amongst heavy to extreme long traders, because that's exactly where the bias stands. In this case, COT speculators, green dotted line, retail traders, blue dotted line, both as percent long. You can see they're above 50%, so both holding majority long bias throughout the entirety of this period, and that means that they've been big beneficiaries. Of course, we did see a little bit of range trading within the 1730s, as well as that oscillations of the 1770s before hopping back on, anticipating further price gain.